Okay, what's up everybody? This is Scott here again with a brand new video to help you learn how to trade, invest, and master your finances so you can apply that knowledge in the real world and multiply your money. And welcome to my next installment of my live option trading series where I show you all the trades and all the adjustments I made over this past week. Now, unfortunately, this week was one of my worst weeks in a very long time because of my Peloton earnings trade. And in fact, overall, this earnings season has been pretty darn awful. Right, it just seems with this cycle in particular, let's come to the charts real quick here. I already have Peloton pulled up. I'll zoom in. Just take a look at what happened with Peloton after their earnings announcement yesterday afternoon. So this stock is down by over 30%, which has been kind of the theme with this earnings season, at least for the trades that I've been making. So Peloton totally screwed me. Same thing with Snapchat, Bed Bath & Beyond. So again, overall, this has been a pretty poor earnings cycle. So that is going to be the main focus of today's video. A lot of my earnings trades this week, most notably in Peloton, as I just showed you, and then also in Zillow, which also had a huge outsized move, but I was able to save that trade and hold on to it for the time being. And in this video, you're going to see exactly what I did to turn this trade around from a big loser into, so far, a nice winner. Now, as always, before we get started here, in case you are brand new to the channel, I just want to let you know that you can also find me on Skillshare as well, where you can take my very in-depth classes on options trading or stock market investing. And I provided some links to some of the introductory courses of mine in the description of this video below. So be sure to check them out. And when you sign up for Skillshare using any of those links, you'll get a full 1-month free trial. Okay, so with that being said, I'm going to stop here and play a few clips that I recorded from this past week that will show you those various earnings trades I made and all the adjustments on my other positions too. So let's get started. All right, today is Tuesday, November 2nd, and there's a couple things I want to do in my platform this morning. And in fact, I've already gone ahead and made a few adjustments in my GDXJ position. I'll go over those in a minute, but first of all, I do want to go ahead and take off my NUE short strangle. So in case you have not seen my previous live option trading videos, this trade here was an earnings trade where right before the announcement was made, I stepped in and sold the 97 strike put option and also the 116 strike call option. And then ultimately, once the earnings announcement happened and implied volatility collapsed, and then after a few more days passed by, and now as of this morning, I am up on this position by about $185. So I am a bit short of hitting my profit target, but there are also some more earnings trades coming up today and later this week. So I do want to go ahead and take this one off a bit early and free up some capital. So with that said, we'll come up here and I'll have to find my NUE closing order. There it is right here. So as you can see, my limit price to buy back both of those options is for a debit of $195. And right now the mark price for the strangle is at 210, only 15 bucks away. So like I said, I'm taking this one off a bit early, but not that much. So we'll go to cancel and replace, and we'll see if I can get filled at the best price possible here. Mid price is about 213. I'll come up to maybe 215, confirm and send, and we'll see what happens here. And there we go, just got filled at 215, so very awesome. And now that I'm out of those contracts, I can come back to the monitor tab and cancel my hedging orders, which you can see here. These orders are always in place to either buy or short the stock, depending if my call strike or my put strike gets breached. And in that way, I don't have to deal with the shares manually by hand and be glued to my charts. So this is a very nice thing to do. And so I can simply go to the working order. This is the order that is currently active, and I can right click on it and go to cancel order. And that will cancel all the orders that are dependent on it. And then finally, one more step, I'll come down here to the now unallocated section, and that's where my NUE position has moved to, which you can see right there. And last step is to cancel any alerts I still have active. So right now I still have 2 active alerts, and I'll go ahead and cancel those, 1 and 2. So great, I'm now officially done with my NUE short strangle. Okay, so now what about my GDXJ adjustments? So first of all, as you can see here with these 4 orders, GDXJ did bounce through my put strike 2 times, and that's why I had to short the 200 shares, then buy them back, then short them once more, and then of course buy them back again. And as you can see with the actual prices that these orders were executed at, GDXJ was hovering right around 43 bucks per share, which is my put strike. And of course, every time this happens, having to short the shares at, for example, $42.85 and then buying them back for a price of $43, I'm going to lose 15 cents per share. Times 200 shares, that's a loss of 30 bucks. And so ultimately, once this kind of thing happens enough times, if it ever does, I will have to start making adjustments to the overall position and taking extra credit to compensate for these small losses. And that's exactly what I did here with this order, where I rolled down my call option from the 44 strike, now also down to the 43 strike. So this position, which you can see down here, this started out as simply a normal short strangle where my call strike was at 44 and my put strike was at 37. But over the course of this expiration cycle, GDXJ has bounced through both my call strike and my put strike multiple times. And that's why I've been having to make adjustments by either rolling up my put option or rolling down my call option, which is what I did this morning. And ultimately, the adjustment I made this morning is the last one I can do. Now that both my call option and my put option are at the same strike, this position is now a short straddle, and I can no longer do anything else to take in extra credit. So it's definitely not a great situation to be in, but as you can see once more with these stock orders, I've lost about $60 this morning from having to repeatedly short and buy back the shares. And when I made that final adjustment by purchasing back my 2 call options to close at the 44 strike, and then selling 2 new ones to open at the 43 strike, in doing so, I took in an extra credit of $41 per contract, or $82 in total for both of those contracts. So that $82 more than compensates for the $60 I've lost from the stock this morning. And then finally, the last piece of this adjustment is due to the fact that right now GDXJ is below $43 per share. That's why I also had to once more short 200 shares of this ETF. And so as long as GDXJ remains below $43 per share, I'll come to the charts real quick here. So as long as this ETF remains below that point on the charts, which you can see right there, I will continue to hold those shares short. And then of course, should GDXJ turn around and resume back higher and go back above $43 per share, then I will switch and become long 200 shares of this ETF. And right now, actually, the share price is $42.98. So we're basically right on my short call and short put strike. So anything can happen over the next few seconds. I do have orders in place to buy back all those shares I shorted and go long on 200 more should GDXJ go up by a few more pennies. But ultimately, in the grand scheme of things, it does not really matter where this ETF goes. I couldn't care less if it goes to the moon or if it crashes down to $10 per share. All I want is for GDXJ to stay away from my short strike of 43. Because again, like I showed you, if it continues to bounce around my strike prices, that's where I'm going to lose a little bit of money every single time that happens. Fortunately, though, stocks do move, right? They don't just stay pinned to one exact specific price for a long period of time. So hopefully today, or maybe over the next couple of days, GDXJ might start to actually move away from $43 per share. And so with that said, I believe that's all I wanted to show you this morning. But like I mentioned, there are some earnings trades today and also tomorrow and Thursday. So if I do decide to pull the trigger on any of those trades today, I will of course record those as well, so you can see every detail that goes into making those kinds of trades. Okay, I'm back still on the same day, Tuesday, November 2nd, about 22 minutes before the market closes. But before that happens, I do want to place an earnings trade on Zillow stock here. Now, this is the first time I'm trading Zillow, but it does meet all of my criteria to go forward and make an options trade. So for example, if you come to the trade tab here, you can see the daily volume for the stock is above 13 million. So the stock is very liquid, and that's a good thing. Also, it is easy to borrow. So in case I need to short it for some reason, it should be very easy to do so. And also coming down to the options, the volume is pretty decent. Same thing with the open interest. And of course, the most important thing, if you come back to the charts down here with the implied volatility, of course, we're seeing very, very high implied volatility for Zillow. And so leading into this earnings announcement, the IV has expanded all the way up to about 74%. That's pretty darn high. And this equates to an IV rank of 74%, very good, and also an IV percentile of 90%. That's extremely good. And so ultimately here, because the implied volatility for Zillow is so elevated compared to where it usually is, that means I do expect to see some pretty inflated option prices. And that's the main thing that attracted me to this stock here. Now, in terms of the price action chart, let's zoom in here a bit. Zillow is down pretty hard today, around 10.7%. And this big down day is also occurring on the heels of another big down day yesterday. So 2 very large down moves in a row. And perhaps now the stock is finding some support around $84.50 per share, somewhere around there. Right, very briefly here, I'll come up to my drawing tools and go to the trend line. I'll draw in that support level so it's easier to see. There we go. And then I'll go back and switch my tools once more, back to the regular cursor. So again, this line in red perhaps could be a pretty significant support level. But of course, given that we're about to approach an earnings announcement, anything can happen. If the earnings are abysmal, then definitely this stock could gap over this support level come tomorrow and continue down lower. So bottom line is I'm not going to give too much weight or importance to the support level, but I definitely don't mind leaning a bit bullish for my trade here. And with that in mind, we'll come back to the trade tab now and also take a look at the 1-day expected move for Zillow. Right now, the market is expecting this stock to move up or down, plus or minus by about $10. That's a pretty large amount. So given that the stock is currently trading at about 87 bucks per share, I want to make sure I put my strikes at least 10 bucks away from this price. And so as I typically do for an earnings trade, I'm going to sell a short strangle, both a call option and a put option simultaneously, and keeping in mind that $10 expected move, although most of the time the stock does move less than what's expected. That's the main thing I'm hoping for here, but still keeping that in mind, that's why I'm going to pick the 75 strike put option, about 12 bucks away. And then on the call side, I'm going to choose the 110 strike, which is about 23 bucks away. And the reason why I'm doing this is because the delta on this contract is 16 and the delta on my put option is 22. So what this means is because the delta on the put is slightly larger than the call option, that's what gives this strangle here a slightly bullish bias. And so the next step, of course, is to come over here and right click on the call option and go to sell, and we'll go to strangle. And that brings up the sell order down here below. Going to sell one contract of the 110 strike call option and at the same time sell one contract of the 75 strike put option. And the total credit I'm going to receive for putting on this position is going to be about 430-ish bucks, somewhere around there. And the markets on these options are pretty tight, so I'm going to come down maybe 1 or 2 pennies, not much more, and hopefully I can get filled. So we'll try 434, go to confirm and send. Buying power effect is 870 bucks. That's totally fine. Actually a bit less than I expected. So we'll go to send. And there we go. Just got filled at 434. Very nice. And then last step is to set up my buying order to buy these contracts back, hopefully for a much, much lower price. Buy back one contract, 110 strike call. Also buy back one contract of the 75 strike put option, which is right around here. And as usual, I like to take my profits at 50% of the maximum, so I'll buy these contracts back for half price. Half of 434 is 217. And then finally make it a GTC order, so it's always in place. Confirm and send, all done. Great, so at this point, the market is going to close in about 10 minutes, and I do expect the earnings announcement for Zillow to come out pretty soon after. And again, hopefully the stock moves within the expected range of up or down by 10 bucks. And then, of course, the main thing I'm looking forward to is to come tomorrow, and perhaps also over the course of the rest of this week, is to see a very nice crush in the implied volatility for this stock. Right, as I've said many times in previous live trading videos, almost every time there's an earnings announcement on the horizon, you will see a large expansion of the implied volatility for that stock, a large expansion of uncertainty essentially. That's basically what implied volatility is. And as I explained earlier, when this happens, the prices of all the options on Zillow will increase as well, or at the very minimum, they will hold their value. Time decay will not really have an impact on these options while implied volatility is expanding. So that's why I like to wait until this exact moment to sell options when they're at their highest possible prices. And then again, come tomorrow, once all that uncertainty goes out the window, because now everybody knows how this company has performed over the past quarter, that's when you're pretty much guaranteed to see a collapse of the implied volatility and therefore a collapse of the option prices. And assuming, of course, the stock does not move too much when that happens, then that allows you to buy the contracts back for much lower prices and make the difference as your profit. Now, I still also do treat my earnings trades like regular trades in the sense that I will hold on to these positions as long as I need to make my full profit if it's ever possible. Right? Sometimes people sell options around earnings and then they close their trade the very next day no matter what happens, either for profits or losses. But in my case, again, unless I reach my profit target come tomorrow, I'm going to hold on to this position until I do. So in that sense, I pretty much just use earnings as a great way to pick a trade entry point. Right? I always want to sell options when implied volatility is high, and high implied volatility usually coincides with an earnings announcement. Not always, but usually. And so with that said, now I just got to wait about 5 more minutes for the market to close, and then we'll see what happens with Zillow. Okay, so here we are about 90 minutes after the market has closed, and as you can see here, Zillow has definitely made its move once those earnings figures became public. Now, after hours trading is still ongoing, so you will see this stock bouncing around a bit more, but overall, at this point, I do think Zillow is going to rest somewhere around this new price, around 79 to 80 bucks or so. And the full magnitude of this down move amounted to about $8.20. So at the moment, Zillow is within the expected move of about 10 bucks, right? And like I mentioned earlier, this is usually the case. Most of the time, stocks do move within that expected range. So that's very good news. And of course, we'll see what happens tomorrow once the market opens. And at that point, we'll see if there's any further reaction to those earnings figures, which unfortunately were not very good. But given that the initial reaction of this stock was within that expected range, I do still definitely anticipate to see a very nice crush in that implied volatility. So everything looks good so far, and tomorrow morning, once the market opens, we'll take a look at how the option prices are going to react based on this move. Okay, so now it is Wednesday, November 3rd. This is the morning after Zillow announced their earnings, and unfortunately, I'll zoom in here a bit, this stock has continued lower after that initial move after hours yesterday. So as you saw in the previous clip, that initial move for Zillow stock was down by about 10 bucks or so, pretty much right at the expected move. But like I said, as of this morning, the stock has continued lower by an additional 6 or 7 bucks. So now Zillow is down by $16.35 in total, almost 20%. Now the good news, however, if we come down to the implied volatility chart, we are seeing some implied volatility contraction right there. But because the move so far has been well beyond the expected range, that's why we're not seeing a huge crush in the implied volatility like I was hoping for. That being said, over the course of the next few days, perhaps this stock can kind of stabilize and maybe bounce a little bit. And if that happens, then I do definitely expect to see much more contraction in the implied volatility. Moreover, if we come back to the monitor tab now, I was also able to short Zillow stock pretty much right when it breached my put strike. So as you can see with these series of orders that got executed this morning automatically, there was a brief moment where Zillow was bouncing through my put strike of 75. So as you can see here, Zillow fell down below 75. I shorted the shares at 74.66. Then I had to buy them back at 75, so on and so forth. And then finally, I shorted the shares one more time at a price of $74.70. And once this order got filled, Zillow has continued to move down lower and lower and lower. So that's where we are now with the stock trading at about $70.60, well below my put strike now. And so ultimately, even though I would prefer this to not happen, ideally I would want Zillow to stay within that expected price move so we could see a very nice crush in the implied volatility, a nice crush in the prices of those options I sold, and then I could buy them back for much cheaper prices and get out of the whole trade very quickly. So that's the ideal scenario, but this situation is not that bad either. So one last time, I'll come back to the monitor tab and go down to the actual position, and I'll unfold this tab right here. So the short stock is definitely saving my butt on this trade so far. And that's what can still actually allow me to take a profit on this position even if Zillow stock continues to move down lower and stay below my 75 put strike. Right, so if we focus on the put option here, so far this morning I've lost about 516 bucks just on that one put contract. And then right above it, you can see here with the 100 shares of short stock, on this part of the position, I've made 357 bucks. So that certainly helps out a lot with canceling out some of the losses on the put option. And then also with the 110 strike call option, of course, because Zillow has moved away from my call strike, on this option, I've made 123 bucks. So in total, the net effect on this position right now is a loss of only $52. Whereas if I did not short the stock and make an adjustment, I would be down probably around, I would say at least $400. And like I said, this stock can continue moving down lower if it decides to. And in that way, the gains I'll make on the short stock will exactly cancel out the losses on the put option, at least by the expiration date. Moreover, as time marches forward, time decay will certainly eat away at the value of those options. And then also, like I mentioned earlier, I still definitely expect to see a continuation of the contraction of implied volatility. So all those things working together can still allow me to walk away from this trade with a nice profit, either by the expiration date or even well beforehand. So we just got to sit tight and keep managing this position here. Okay, so I'm back still on the same day, Wednesday, November 3rd, and one stock that definitely caught my attention is Bed Bath & Beyond. So if I zoom in here a little bit, just take a look at what the stock has been doing today. So compared to the closing price of yesterday, Bed Bath & Beyond has gone from a price of about $16 and call it 70 or 80 cents, all the way to a high of around $26. And then since making that high, it has backed off significantly, coming back down almost all the way. Now, if I zoom back out, we can obviously see multiple times in the past where Bed Bath & Beyond has exploded in price for some reason. This is obviously a meme stock, but it seems the news this time around, if we come over here, and I'll click on this headline, as you can see, shares at Bed Bath & Beyond rose sharply Wednesday, jumping as much as 54%. Wow. After the company announced it had accelerated its share buybacks, of course, and launched a collaboration with supermarket operator Kroger Company. So I guess basically some very brief short-term euphoria around this news. And of course, along with a 54% increase in the price just in one day, we're obviously seeing a huge increase or spike in the implied volatility. Now, this is not too common because, again, the stock has actually increased in price, and typically when stocks go up, implied volatility goes down. But basically, any time where a stock makes a huge move in either direction, up or down, you will almost always see an expansion of implied volatility. And so again, as I mentioned, if we come back to the price action chart, I'll zoom back in a little bit here. As I mentioned, this euphoria does seem to be a bit short-lived since the stock has sold back off almost all the way back down. So at this point, I'm just going to try and take advantage of these still heightened levels of implied volatility. Because assuming things kind of calm down from here, I would definitely expect to see a collapse of this implied volatility. And so with that said, we'll come over to the trade tab now, and I'm looking in the December expiration cycle with 44 days left to go. I'm going to sell a bearish skewed strangle. So in particular, I'm looking at selling the 27 strike call option and also the 16 strike put option. The puts have an 18 delta and the calls have a 28 delta. So that's what gives this strangle here a bearish bias. And the reason why I chose these two strikes in particular is because, if we come back to the charts one last time, 27 is above the high of this candle from today. So here is the 27 price level, well above today's high and also above the 200 period moving average, which you can see here in yellow. This can also act as resistance as well. So I do feel pretty safe selling the 27 strike call options and then the 16 strike put options. This strike is below the high of yesterday's candle and also the closing price. So even if Bed Bath & Beyond came all the way back down and closed this price gap here, my put options would still be safe. And of course, because the implied volatility is so high right now, that's why I can sell options so far away and still collect a pretty decent credit. So I'm going to go ahead and right click on the call option here, and we'll go to sell and then strangle. And so I'm going to sell 2 contracts each, 2 calls and 2 puts, 27 strike call option, and then also the 16 strike put. And the credit I'm going to receive per strangle is just short of $200. That's pretty darn good for a $20 stock. Again, thanks to the very high implied volatility. So I'll come down to maybe 195, see if I can get filled here. The markets are a bit wide because this stock has gone so crazy today. And so with that, we'll go to confirm and send. Buying power effect is only $400. That's great. So we'll go to send. And no fills on this order yet, so we'll come back to the monitor tab and take a look at what's going on here. And you can see my Bed Bath & Beyond order right here. And my limit price is still below the mark price, but I will come down maybe a bit more. Cancel and replace. I'll come down to maybe 192. See what happens here. And there we go. Just got filled and price improved to 193. Very nice. Great. So with that said, you know the drill. Last step is to set up my buying order to buy these contracts back, hopefully for a much lower price. And that would definitely happen if that implied volatility collapsed over the next few days. That's what I'm hoping for. So down here, we're going to buy back both contracts, 27 strike call option, also the 16 strike put option, and I'll do so for half price. And half of 193 is about 96 or so. Lock in that price, make it a GTC order, confirm and send, all done here. And of course, now I will definitely keep a close eye on this position just in case Bed Bath & Beyond starts to really move in a big way again. Because if my call option gets breached, for example, I will step in and buy 200 shares of this stock. And then conversely, if it falls below my put strike, I will short 200 shares of the stock. But again, my strikes are pretty far away on both sides. So hopefully over the next few days, this implied volatility can come down, causing those option prices to collapse, and I can get out for a nice profit very quickly. So we'll see. Okay, it is now Thursday, November 4th, and there's a few things I want to do today. As you can see, I've already gone ahead and made a few adjustments in my EWZ position. I'll go over that in a minute. But first of all, I do want to go ahead and take off my CROX position for an early profit. The main reason is I do want to free up some capital so I can trade an earnings announcement on Peloton later this afternoon. Now this trade here is a bit complex because CROX is now extremely far above my short call strike. I'm in the November expiration cycle for this trade. So my short call strike is all the way down at the 160 strike and my put strike is at 120. And so of course, given that the stock is trading at 177, it's obviously breached my call option by a full $17. That being said, this is not actually a problem because I did go ahead and buy 100 shares of the stock once it breached my call strike. And that's what makes this position a little bit complex. I'm short 2 different options and also long 100 shares of stock. And so the first step here is going to be to buy back both of these contracts. I already do have an order in place to do so, which should be somewhere around the top, I think. Here it is. But I'm going to have to cancel and replace it and change my limit price here. So I'll come down below and we'll take a look at what the mark price for this strangle is right now, about $1,900. I'll come up to maybe 1910, see if I can get filled pretty quickly here. Go to confirm and send, and there we go, just got filled at 1905, pretty good. And so now the last step is to sell the 100 shares I bought. So we're going to create a sell order to get rid of those 100 shares, and I'll just sell them for the best price possible. Confirm and send, and there we go, got filled at 176.91. And so at this point, I am now officially out of my CROX position, and briefly we'll pull up the calculator here, and we'll figure out what the final P&L of that trade was. So first of all, let me scroll down a little bit here so we can see the orders. And so originally I sold that strangle, the 160 strike call option and also the 120 strike put option, for a credit of $530. And then as you just saw, I bought those contracts back for a debit of $1,905. So we'll subtract 1905. And so far that means I'm down by $1,375. Moreover, there was also a brief moment where CROX was bouncing through my call strike right when it was trying to breach 160. And so that caused me to have to repeatedly buy and sell the stock a couple times and lose a little bit of money each time that happened. And then of course, eventually it breached 160 for the last time and then continued higher from there. But still, I do have to factor in those small losses, which amounted to another $178. So that means in total, adding up all the losses on this trade so far, that means I'm down by $1,553. And so now I'm going to go ahead and clear the screen here, but don't forget this number, 1553. Now, as I mentioned, the last time that CROX breached my call strike, I did buy the shares one more time at a price of $160.41. This was the price I got filled at. And of course, buying stock, that's going to cost money. And then also this morning, as you saw, I sold those shares for a profit at a price of $176.91. So we're going to add 176.91. And that means I made a profit of $16.50 per share times the 100 shares. That's an overall profit of $1,650. And finally, I subtract the 1553, or 53, there we go, that I've lost in total on the position. And so the net effect is I still walk away with a profit of $97, which unfortunately is well below my profit target. I was trying to make a few $100 on this position, but I still wanted to go ahead and remove it, take some profits, and then redeploy the capital on a fresh brand new trade in Peloton later this afternoon. And then lastly, as I mentioned at the beginning of this clip, my EWZ adjustments, what did I do here? Well, this ETF is also giving me a pretty hard time. We'll come to the charts real quick here, EWZ. So this stock has been hovering around my 30 strike put option, or specifically it's been hovering around the 30 strike, which has caused me to lose some money every time it's bounced through that price. And now this morning, as you can see up here, EWZ has dropped below $30 once again. It's now at $29.62. And that's why with this order right here, I had to short 300 shares of this ETF. Right, as long as the price is below 30, below my put strike, I'm going to hold those shares short. And then finally, as an additional adjustment to take in extra credit to compensate for those losses I've been taking every time EWZ bounces through my strike, as you can see here with this order, I did roll down my call option from the 31.5 strike down to the 30 strike. So now at this point, I have converted my position into a short straddle where both the call option and the put option are at the same strike of 30. And in doing so, I took in an extra credit of $48 per contract times 3 contracts. So that's a total additional credit of $144. And so there you have it for the trades I'm making this morning. And so now, like I mentioned, I'm just going to wait until later this afternoon, and then I'll go forward and make my trade on Peloton. Okay, here I am back again about 30 minutes before the market is going to close. As I said, I did want to place a trade on Peloton here because they are announcing earnings once the market closes. Now, as usual, leading into an earnings announcement, you are going to see an expansion of the implied volatility. But today especially, look at this. There has been an absolute explosion of the implied volatility just in the past few hours. So for whatever reason, it looks like there's a lot of uncertainty and anxiety around these earnings figures for Peloton, because with the IV at this level at around 87.7%, this translates to an IV rank of 100% and also an IV percentile of 100%. So right now, this is basically the highest point that implied volatility for Peloton has been over the past 1 year. And so as a result, I definitely expect to see some very inflated option prices, and we'll come over to the trade tab now and take a look. And so for this trade, I'm considering selling the 110 strike call option alongside the 70 strike put option. Both these contracts have about a 20 delta, so this is going to be a pretty directionless or delta neutral strangle. I'm not trying to pick directions here. I'm simply trying to take advantage of the collapse of implied volatility. That's what I expect to see once those earnings figures come out. And also one more thing, we'll take a look at the 1-day expected move for Peloton here. That's up or down by about 11 bucks or so. So given that I'm going to sell the 70 strike put option, which is 16 bucks away from the current trading price, and also the 110 strike call option, which is about 24 bucks away, I do feel pretty safe with my strikes here. And so with that said, we'll come over here and right click on the call option, go to sell and strangle. And there we go, down here, going to sell just one contract, 110 strike call, and then also the 70 strike put option. And here we go, the total credit I'm going to receive for this entire strangle is just shy of 500 bucks. Very nice. And again, this hefty credit is due to the fact that implied volatility is so high for the time being. And so I'll lock in a price of maybe $492, go to confirm and send. Buying power effect is 868 bucks. That's fine. So we'll go to send. And there we go. Just got filled at $495. Very nice. And then of course, last step is to set up my buying order to buy these contracts back. I'll do it very quickly here. Okay, here is the order. This is my profit taking order. And so I'm going to buy these contracts back for half price, or at least that's what I'm going to try and do. So half of $495 is about $297. Lock in that price, make it a GTC order, confirm and send, all done here. So once again, now I just got to wait until the market closes. We'll see how Peloton stock reacts once those figures become public. And of course, if this trade does end up like it did with Zillow, if the stock drops super hard or if it explodes, then hopefully come tomorrow, the stock will still be within my short strikes or perhaps not too far beyond them, in which case I can either buy the stock or short the stock depending on whether my call or put strike gets breached. Okay, welcome back. I hope you enjoyed those few clips here. And so now finally in this video, let's go over the few adjustments I made this morning and also, of course, taking off my Peloton trade because unfortunately, this was the only thing I can do to stop the losses. So focusing on Peloton first, as you saw in the previous clip, I sold the 110 strike call option, also the 70 strike put option. But this morning, if you come back to the charts real quick here, this stock opened at around 56 or 57 bucks per share, well below my put strike. So normally I would try to short the stock once it falls below my put strike, but if there is just a huge, massive gap move like this, where even shorting the stock would not save me in any way, the one option I have is to simply remove the entire position and just carry on. And of course, also because the move was so freaking large, if you come down to the implied volatility, almost no contraction so far. So definitely very disappointed with my Peloton earnings trade. And as you can see with this order right here, I bought back both of those contracts for a total debit of $1,318. So if you recall from the previous video, when I sold that strangle to begin with, I took in a credit of about 500 bucks or a bit less than that. So that means the net effect here is I lost about a little over $800 on this one trade. And this is definitely the worst loss I've had in many, many months. So that's Peloton. And then also you can see here, there's a few orders in AMD that got executed this morning. These are my stock hedging orders because my call option did get breached very briefly. And so just to give you a visual, let's come back to charts and go to AMD. Let me move these other charts down and I'll zoom in. So my short call strike is right here at the 140 strike. And as you can see, AMD did pierce through it very briefly. So I had to buy 100 shares of stock. And then once it fell back down below, I got rid of those shares. And now AMD is selling back off down to currently a price of 137. So maybe, hopefully, this is the top for the short term. And then lastly here, coming back to the monitor tab, also EWZ, I bought 600 shares of this ETF because, as you saw in a previous clip, I did have to roll down my call option to also the 30 strike. So if you come down to my actual position, both my call option and the put option have the same 30 strike. And so before today, EWZ was below 30, and that's why I was short 300 shares. But now it has popped back above 30, which means I had to buy back those 300 shares I shorted and then also buy 300 more to go long on the ETF. And that's what you can see right here, plus 300. I'm now long 300 shares of EWZ. And so then, of course, the reason I bought 600 shares in this one order is simply to do both things at the same time. Buy back the short shares and then go long on 300 more. And so with that being said, I am going to have to stop here a bit early because I do have a pretty busy workday ahead of me. So thanks so much for watching this video. I hope you enjoyed it. And please let me know your thoughts or if you have questions in the comment section below. And don't forget, if you want to take some very in-depth classes on options trading or stock market investing, then check out my Skillshare courses. Links in the description of this video. And finally, if you enjoyed this video, then please give it a thumbs up, drop a comment, and subscribe to my YouTube channel. I drop new videos every single week, and you don't want to miss out. So thanks again for watching, and I'll see you next time.